All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Now, this episode may be a tough one to do just because there's so many sharp movements happening right now. Gold and silver both had a pretty strong day yesterday, and it looks like they're trying to get back to where they were, with gold almost getting above 1900 and silver above $24. So we'll get into all of that shortly, but first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so let's start first with the old yellow and the white knight. Now, we had some really interesting moves already. Take a look at those spikes in gold and silver around the 9 a.m. Eastern Standard Time. That's a pretty severe move. And my first thought when I see something like that is, it's gotta be trading. Can't be anything else but trading. But honestly, I logged into my Thinkorswim account and saw very little trading volume at that time, though there was some purchasing volume. Now at the opening bell around 9:30 a.m. Eastern Standard Time, the selling volume just blew all of that pre-market trading volume out of the water, hence that severe drop in gold and silver. What also aided that drop was a rapid rise in the DXY, as you can see here, leading up to the 10 o'clock hour. And then it was followed by this huge rapid fall in the DXY, which helped to boost gold and silver prices right after. So obviously there's some craziness going on in the Forex markets. I mean, we're back down to 93.68 right now in the DXY, and that's a huge drop from where it was just today above 94. So there's a lot of craziness going on right now. So let's see if we can try to figure some of this out. So the pound right now is, right around the time we saw the DXY drop, the pound started to gain on the dollar severely. This is the pound over the US dollar. The euro as well start to gain over the dollar here, right around the time that the DXY fell. And even the Japanese yen start to edge up a little as well. So you have the top three opposing currencies just starting to gain on the dollar, and or I should say, you have the top three currencies to the dollar in the DXY starting to gain some momentum. And this makes sense that the dollar fell in the way that it did back into the DXY's 93s. But as we all know, the euro is the strongest weighted opposing currency in the DXY. Now, here's a potential wrench being thrown in the system that could maybe throw some cold water onto gold and silver, possibly maybe later on in October. We'll have to monitor this, but check this out. Euro strength tipped to be short-lived. Lagarde prepares market and further stimulus. So let's see exactly what could be happening here. The euro is one of 2020's top performers, but the period of outperformance that took the single currency to the top of the leaderboard might have come to an end, with the European Central Bank lining up its big players to warn they are not comfortable with the pace and extent of the currency's rebound. A series of verbal interventions on the currency's appreciation have combined with concerns that the Eurozone economy's recovery is faltering to create an impression that the ECB will step up its support at some point in the coming weeks, which could stem the euro's upside potential. European Central Bank President Christine Lagarde told a hearing of the Committee on Economic and Monetary Affairs of the European Parliament that the euro was a concern and that it is clear that external value of euro has impact on inflation. Lagarde signaled actions that could hinder the euro's appreciation, while boosting the economy might well be forthcoming. Providing a moral framework for further intervention, that could see quantitative easing expanded once again, Lagarde said. We are still feeling the impact of the Ronies across the euro area. Businesses are facing difficulties, people are losing their jobs, and prospects for the future remain uncertain. While euro area economic activity rebounded in the third quarter, the recovery remains incomplete, uncertain, and uneven. The public health crisis will continue to weigh on economic activity and poses considerable downside risks to the economic outlook. Lagarde concluded that in the current environment of elevated uncertainty, the Governing Council will carefully assess all incoming information, including developments in the exchange rate with regard to its implications for the medium-term inflation outlook. It continues to stand ready to adjust all of its instruments as appropriate to ensure that inflation moves towards its aim in a sustained manner in line with its commitment to symmetry. A simple principle in foreign exchange markets is that when a central bank embarks on a path of fresh monetary easing, i.e. cutting rates, boosting quantitative easing, the currency it issues declines in value. And that could be a little bit of a rain on our gold and silver parade if this is to occur. But we'll see, because we actually have some issues that we have to contend with here stateside that may need some addressing. Today we got the Q2 GDP revision. It actually is on an upward, or actually had an upward revision from 31.7% to 31.4%. It's very minor, very small, but overall pretty terrible quarter in a relative sense, but Q3 actually ends today. So I'm curious to see how we did from July 1st to September 30th. Now, I personally wouldn't be surprised if we edged up a bit compared to Q2 as we enter Q4. I can only imagine, if we did edge up, we'll edge back down. And I mean, as far as Q3 is concerned, take a look. Companies added better than expected 749,000 jobs amid jump in construction, hospitality, ADP says. And this is just for November, guys. Let's take a look. Companies added jobs at a faster than expected pace in September, due in good part to a surge in manufacturing hires, according to a report Wednesday from ADP. The firm's monthly private sector jobs count showed growth of 749,000 ahead of the 600,000 expected from a Dow Jones economist survey. The report, done in conjunction with Moody's Analytics, comes 2 days ahead of the more closely watched Labor Department count of non-farm payrolls growth. That report is expected to show an addition of 800,000 after August's 1.37 million, with the unemployment rate projected to fall 0.2 of a point to 8.2%. However, during the Ronies, ADP's initial estimate has often trailed the official government count by a significant margin, indicating potential upside for the September count. And also, we have this. Chicago PMI apparently surges to the highest level since December of 2018. So guys, I mean, as you can see, the reopenings of businesses in the summer and what I just showed you here, I wouldn't be surprised if Q3 shows a little bit of an uptick in GDP. But as far as what I assume may happen in Q4, I can definitely see that possibly trend down. Now, the interesting thing about all of this, we're actually above 1900 now in gold. That's crazy. Just saw that. This just popped up here. But the funny thing about all this positive data is that it barely kept gold and silver down today. As you can see here, we're starting to trend back up. We're back above $24 with silver as well. And much of this movement is still linked with what's happening in the currency markets. Obviously, the dollar is having a really tough day right now. So I'll continue to monitor all of this week as things start to press on. But guys, let me know what you think about all of the movements today in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.